Welcome back, everybody, for another deep dive. And today we're looking at something I think a lot of people are familiar with. We're talking about Zoom,
Yeah.
but we're going beyond just that familiar interface, we're used to seeing, especially over the last few years. And we're asking, can this tech giant really keep up their momentum in a world that's not quite as reliant on those pandemic lockdowns?
Right.
So we're going to be uncovering some fascinating details about their financials, their
Yeah.
leadership, even kind of a counterintuitive move they're making that I think really hints at their future plans. So
Yeah.
stick with us on this deep dive because it might just change how you see Zoom.
I think you'll be really surprised by some of the stuff that's in here. I know I was.
Right. So I think a lot of people, when they think of Zoom, they think of, video conferencing. Very simple.
Right, like a utility almost.
Yeah, exactly. It's that tool that we all use for, those virtual meetings. But it's really become so much more than that, wouldn't you say?
Absolutely. It's like thinking of a smartphone as just a phone. They've really evolved quite a bit.
That's a perfect way to put it, actually.
Yeah.
So let's rewind a bit and talk about, Zoom's origin story.
Yep.
So founded by Eric Yuan back in 2011, their mission statement from the start was all about making video communication smoother and more secure.
Precisely. But what I find really interesting is how they've evolved from that initial focus on video conferencing to a much broader vision of what they call a video-first unified communications platform.
Okay, so broader scope,
Mhm.
wider range of services,
Yeah.
but are they actually succeeding in this transition?
Well, that's what we're here to find out, right?
Exactly. So let's look at their business operations.
Okay.
Now, interestingly, they actually function as a single business segment.
Yeah, right.
But when you break down their revenue stream, it gets a little more interesting.
Yeah, geographically, you see the Americas as their biggest revenue generator, followed by EME, Europe, the Middle East and Africa, and then the Asia-Pacific region.
Interesting breakdown.
Yeah,
Does this tell us anything about their overall strategy?
I think it does. It suggests they're tailoring their offerings and approaches to different markets, which makes sense, right? Different regions have different needs, different levels of technological adoption.
Absolutely. And, one thing that really stood out to me when I was researching them was their focus on developing these really specialized solutions for things like telehealth and education.
Yeah, it definitely shows they're thinking beyond just the standard business meeting and tapping into some really diverse user needs.
So adaptable, not afraid to branch out.
Yeah.
But what about the leadership at the helm?
Right?
Navigating this massive growth, especially during the pandemic, and dealing with those early security concerns.
Yeah, you're right. Those were some challenging times. And that's where I think Eric Yuan's leadership style really made a difference. He's very decisive, proactive in his approach to challenges.
Can you give us a specific example?
Oh, remember Zoom bombing?
Oh, yeah.
That was a big issue early on, right? People disrupting meetings. It was a real concern for security and privacy.
Yeah, it was all over the news.
Exactly. And Yuan tackled it head on. They implemented those security features really quickly, things like end-to-end encryption meeting passwords.
So they took those concerns seriously.
Absolutely. They put a huge emphasis on transparency, ethical practices, really made it clear that user privacy and data security were top priorities.
That's good to hear. I mean, building that trust is so crucial, especially in the tech world.
For sure.
So beyond security ethics, how are they managing their capital? Are they reinvesting for growth or playing it safe?
Well, their capital allocation strategy is quite interesting, actually. They're not afraid to spend money where it makes sense. They're investing heavily in research and development to constantly improve the platform.
So not resting on their laurels?
Nope. They're also making some strategic acquisitions. For example, they acquired Five9, a company that specializes in contact center solutions.
So moving into new markets.
Exactly. And on top of that, they're engaging in share buybacks, which is a pretty strong signal, I think.
Can you explain that a little?
Sure. Basically, they're buying back their own stock, which indicates they believe the stock is undervalued and they're confident in their future growth. It's like putting your money where your mouth is, right?
Makes sense. So they're investing in R&D, making acquisitions, buying back shares.
Yeah, lots of signs of a company that's really betting on its own success.
All right, but let's get down to the brass tacks here.
Okay.
How healthy are Zoom's financials right now?
Well, the numbers paint an interesting picture. They're definitely bringing in a strong revenue stream, but we're seeing a bit of a slowdown in growth, which makes sense after that huge surge during the pandemic.
That pandemic bump was pretty unsustainable in the long run.
Right. It was sort of a natural adjustment. We're looking at about a 3.1% growth rate in fiscal year 2024.
Okay, so a bit of a post-pandemic reality check, but are there any red flags in the overall financial picture?
I wouldn't say red flags. They still have impressive gross margins at 75.8%, and they're maintaining healthy operating and net margins 17.4% and 21.7% respectively.
Okay, so not bad at all.
No, and their free cash flow is strong. Almost $1.5 billion in fiscal year 2024.
So financially, they're in a pretty decent spot, despite that little slowdown in growth.
I would agree with that.
But before we jump into the second half of this deep dive, I want to remind everyone that you can find all of our sources for this episode down in the description below.
Yeah, check those out.
And while you're down there, let us know what you think. Can Zoom really hold on to that leading position?
What are your predictions?
Share your thoughts. Share your stock suggestions in the comments.
Always love to hear from you guys.
We'll be back after a short break to explore market sentiment ownership structure, and we're going to dive into a full SWOT analysis of Zoom.
SWOT analysis, always fun.
So stay tuned. Okay, so we've gone through a ton of information about Zoom's journey so far, their financial standing, the leadership.
Yeah.
But, numbers only tell part of the story.
Right.
What's the overall feeling about Zoom in the market?
Yeah.
Are investors, optimistic? Are they hitting the panic button?
Well, it's kind of a mixed bag right now. Analysts seem to be cautiously optimistic. They recognize Zoom's dominance in the market, but they're also very aware of that slowing growth we talked about.
It's like a wait-and-see approach.
Exactly. But here's the thing. The average analyst price target still suggests a potential upside of around 25%.
Okay.
So they're not writing Zoom off by any means. They still see room for growth and value.
That's a pretty good sign.
It is.
All right, so let's talk about who's actually holding the reins, or rather, the shares at Zoom. What can the ownership structure tell us?
Well, one thing that stands out is the significant stake held by institutional investors.
Okay.
These are like big investment firms, pension funds, and that kind of thing. And their involvement usually signals a belief in the company's long-term potential.
So they're not just in it for a quick buck.
No, they're looking at the bigger picture, the long game.
And what about Eric Yuan, the founder and CEO? Is he still a major player in the ownership game?
Absolutely. He remains a significant shareholder, which I think sends a really strong message. It shows his continued commitment to the company's future.
Yeah, definitely a vote of confidence.
For sure.
All right, so we have a company with, seemingly strong leadership, a positive market outlook, substantial backing from these big investors.
Right.
But let's be real, no company is without its vulnerabilities.
True.
So to really understand where Zoom stands, let's dive into a good old SWOT analysis.
Love a good SWOT analysis.
For anyone who's not familiar, that's strengths, weaknesses, opportunities, and threats. It's a framework for evaluating a company's, overall position.
It's a classic for a reason. It helps you see the full picture.
Exactly.
Yeah.
So let's start with Zoom's strengths.
Yeah.
What are they really good at?
Well, their brand recognition is undeniable. I mean, they've become practically synonymous with video communication. It's almost like a verb now.
Zoomy.
Exactly. Their platform is also incredibly user-friendly, which is a huge advantage, especially during the pandemic when everyone was scrambling to figure out how to connect online.
Yeah, that ease of use was a big selling point.
And that freemium model, it really hooked a lot of people, allowed them to try it out before committing to a paid plan.
It's a clever strategy for sure.
And of course, we can't forget their commitment to security, especially after addressing those early challenges. It's a major strength now.
So they turned a weakness into a strength.
Exactly.
All right, so strong brand, user-friendly platform, freemium model, commitment to security.
That's a pretty solid foundation.
It is. But what about the flip side? What are some of Zoom's weaknesses? Where could they potentially stumble?
Well, one vulnerability that comes to mind is their dependence on a stable online environment.
Right.
I mean, if there's a major internet outage, Zoom's functionality is pretty much crippled.
Their entire business model hinges on that seamless connectivity.
Absolutely. And despite their efforts, the potential for security breaches is always a concern in the digital world.
Yeah, no system is perfect.
Right. And of course, we have to acknowledge the competition. Microsoft Teams, Google Meet, they're all vying for that same market share.
So Zoom's got some serious rivals.
They do.
But let's shift gears and talk about opportunities.
Yeah.
Where can Zoom expand or innovate to stay ahead of the curve?
Well, one huge opportunity lies in emerging markets.
Okay.
These are areas where video communication technology is being adopted rapidly. And that represents a vast, untapped market for Zoom.
So lots of room for growth there.
Absolutely. And then there's the potential of AI. Artificial intelligence could revolutionize how we use Zoom.
Everyone's talking about AI these days.
For good reason. It has the potential to transform so many industries. And in the context of Zoom, imagine AI-powered transcriptions that are not only super accurate, but can also analyze the content of meetings, identify action items, even suggest follow-up tasks.
That would be amazing.
Or think about AI-driven virtual assistants that could help schedule meetings, manage participants' calendars seamlessly.
So AI could make Zoom even more efficient and productive.
Exactly. The possibilities are pretty mind-blowing.
Right, so they've got strengths, they've got areas to watch out for, and some exciting opportunities on the horizon. But let's not shy away from the last part of the SWOT analysis, the threats. What are some of the biggest challenges looming for Zoom?
Well, competition is always a threat, especially with giants like Microsoft and Google constantly innovating and expanding their features.
Yeah, they're not standing still.
And there's also the potential of an economic downturn.
Right, economic uncertainty is always a factor.
It can impact consumer spending, which could affect Zoom's growth.
So they need to be prepared for those economic fluctuations.
Absolutely. And then there's the constantly evolving regulatory landscape surrounding data privacy.
That's a big one.
It is. It could directly impact how Zoom collects, stores, and uses user data, potentially requiring them to make significant changes to their practices.
So navigating the legalities and ethics of data privacy is crucial for their long-term success.
Absolutely.
You mentioned something earlier that really caught my attention about Zoom prioritizing acquisitions that enhance problem-solving functionality over simply adding more features. It sounds like they're shifting their focus toward a deeper level of user engagement.
I think you're right. They're not just chasing the latest trends or adding bells and whistles for the sake of it. They're really trying to provide real value, anticipate, and meet those evolving needs of their users.
That's a smart move.
It is.
It seems like they're trying to transition from just a meeting platform to more comprehensive solution for a wider range of communication challenges.
Yeah, I think that's a good way to put it. They're aiming to be more than just a one-trick pony.
So as we wrap up this part of our deep dive into Zoom, what are some of the key takeaways so far?
Well, I think it's clear that Zoom is at a really pivotal point in its journey. They've built an incredibly powerful platform, a globally recognized brand.
Yeah.
But to stay ahead in this rapidly evolving market, they'll need to keep innovating, expanding their offerings, and adapting to those ever-changing needs of their users.
And remember, this deep dive is just a starting point.
Mhm.
We encourage everyone to check out the sources we linked in the description.
Yeah, do your own research.
Form your own conclusions. What do you think the future holds for Zoom?
Let us know your thoughts. Share your predictions in the comments.
And if you're hungry for more deep dives into other fascinating companies, be sure to subscribe to the Stock Analytics AI YouTube channel.
We're always uncovering hidden insights that can help you make smarter decisions.
All right, so we're wrapping up our deep dive into Zoom.
Getting to the good part.
But before we sign off, remember that intriguing insight we teased at the beginning.
Oh, yeah.
Get ready, because Zoom is actually prioritizing acquisitions that, bolster that problem-solving functionality over just, adding a bunch of flashy features.
Yeah.
It's subtle, but I think it really shows they're thinking deeply about that user engagement.
Right. It's about providing real value to users, not just, novelty for novelty's sake.
Exactly. And it kind of ties back to that whole idea of them evolving into this video-first unified communications platform.
Right. They want to be that comprehensive solution, not just a meeting tool.
It's almost like they're trying to predict the problems we'll have before we even know we have them.
Yeah, well, a little bit.
So as we wrap up this deep dive into Zoom, what's the big takeaway for our listeners?
Well, I think the key takeaway is that while Zoom definitely faces some challenges, in this post-pandemic world with all this competition, they're still in a very strong position.
Yeah.
Financially, they're solid, and they still hold that dominant position in the market.
Right.
Their future success really hinges on their ability to continue innovating, expanding those offerings, and really addressing those emerging user needs.
Couldn't have said it better myself.
Yeah.
So remember, this deep dive was just a starting point for you guys. We encourage you to check out those sources we linked in the episode description.
Yeah, definitely.
Form your own opinions.
Yeah, what do you think?
What do you think the future holds for Zoom?
Let us know down in the comments. Share your predictions. Share your stock suggestions.
And if you're hungry for more deep dives into other fascinating companies, be sure to subscribe to the Stock Analytics AI YouTube channel.
We're always putting out new content,
We are.
uncovering those hidden insights that can help you make smarter decisions.
Absolutely. So that's all for today's deep dive. But before we go, I just want to give a quick reminder that all the information we share today is for educational purposes only.
Right, not financial advice.
Exactly. Investing in the stock market always involves risks. So do your own research, consult with a qualified financial advisor before making any investment decisions.
And keep in mind that while we do use AI to help us analyze data, AI isn't perfect.
Right.
It can make mistakes.
Yeah.
So don't rely on it solely for your investment decisions.
Good point. So until next time, keep those brains curious, and we'll see you in the next episode.
See ya.